Welcome to the Energy Transition Panel. So my name is Matthias Knapp. I'm here also one of the media sponsors. You see our name up there right below the CNBC. That's us here, Matthias Knapp. I run a niche alternative investment news service. I've been doing this for 20 years. And I'm often asked to put panels together. So I put this panel together, invited wonderful panelists who came in from all sorts of places. Let me start by welcoming G. Hayes, who came in from Princeton, New Jersey. G, pleasure seeing you here. Thank you. Then we have Natalia Shivanova, who is joining us from Zurich. Thank you. Finally, Matt Furley from London, UK. Right. So, after hearing our former Vice-Chancellor, Minister of Foreign Affairs, Joschka Fischer, right, who did that job from 1998 until 2005 under Chancellor Schröder, I was pretty impressed by that. So I always thought that our panel is going to be the most important panel of the conference, but after hearing Joschka Fischer speak, it's actually, I think, probably the second most important panel of the conference. And I hope you get something out of that. And with that, I also want to tell you, we are not doing this for us, we're doing this for you. So if you have a question, please put it in your app. I have an iPad here. I see questions coming up. It was really lovely to see Joschka Fischer again in his jeans, as he used to do it. But now back to our theme, energy transition. And as a first question, let me just quickly introduce you, right? Or you introduce yourself, right?
Sure.
Why are you on the panel, right? What's your link to energy transition?
Sure. I worked in Citigroup for 10 years in alternative investments in 2012, and I founded Songbird Capital. And the firm is providing portfolio solutions to clients. And the portfolios invest in long-term thematic investments, aiming to deliver high compounded return. So energy transition is one of the themes. And in the past year and a half, as the market and policy evolve, and we have seen an increasing number of investment opportunities, and very interesting. So that's why I'm here.
Yeah, so this is the subtitle is De-Invest as You, right? So you had the exchange view, you had the exchange panel. Here, we really want to look at energy transition from an investment management, from allocator, and from an investment manager's perspective. Natalia, why are you on the panel? What's your link to energy transition?
So hello, everyone. Thank you for having us here and joining us during the panel. I represent Aquis Capital, and we are a small boutique asset manager focusing on sustainable solutions either in Southeast Asia or in the world of hedge funds. We have 2 funds of hedge funds, and one is the very first sustainable fund of hedge funds. And there, the topic of energy transition is very important and crucial, and has been the driving trend since many years, and specifically in the last couple of years. So I'm here to share what I know about that and also to learn from Matt and G.
Yeah, thank you. Matt from London, why are you here? What's your link to energy transition?
Yeah, thanks, Matthias. Well, thanks very much for the introduction to be on the panel today. So I'm head of research for Westbet Capital Management's Volta Energy Transition Fund. We're a global long-short equity fund, and we invest all the way through the energy transition, from critical raw materials, processing, cell manufacturing and battery production, electric vehicles, storage, and all the way down to renewables and zero carbon energy. So I've been involved with the energy transition since the latter part of the last decade, and I have my own business also looking at the battery industry. So, yeah.
Okay, so 10 years. Matt, so explain to us, right, from your perspective, why is the theme energy transition important? Why should we all listen and be aware of what's going on in the sector?
Lovely question. I mean, I think it is very, very important to lots of people in the world in terms of lowering the carbon emissions, and you know, for a lot of people, it's vital. People who live in places with that are going to react to high sea levels, people in countries in the world where climate change is impacting them. And I think it really is the most important investment thematic of this decade, potentially of the next 20 or 30 years. And it's very, very involved. There's lots of moving parts in the energy transition. We use energy transition as a sort of throwaway line, but you know, as I highlighted in my introduction, there's lots of sort of thematics. There's lots of areas, key focus areas within the energy transition. So, you know, from my point of view, it's an area which is very exciting. It's always changing. There's always new technologies coming along that can help us to lower carbon intensity and help us to improve the world and its environment. Yeah.
Who wants to add? Why is energy transition really important as a theme to understand and to grasp?
I think it's also a health issue because 60% of emissions of fossil fuels being burned remain in the air. And basically that's the air all of us breathe in. Basically going with the energy transition and reducing CO2 emissions helps us improve public health, and our health is our future. As well, energy security became a very important topic in order to be independent from foreign importers of oil and gas and be independently sustainable within own local communities.
And G, from your perspective?
Yeah, I think this is the most critical and probably largest transition in our lifetime. Because, you know, fossil fuel is a finite resource. We know that one day it's going to run out. And increasing, you know, extreme weather conditions, events are really devastating. And personally, I experienced Hurricane Ida. So that was a really wake-up call. I think the last 2 years, U.S. Two hurricanes, Ida and Ian, cost $200 billion, just damage, property damage, that there's human suffering beyond that. 33 million people in Pakistan lost their home. And as a person witnessed, you know, the flood during Ida, 3 hours from 8 p.m. to 12 p.m., it's a flash flood, come in and out in 3 hours. I live outside Princeton, a farm, 9-acre farm, and it's just in and out. The first floor, 3 feet water in 3 hours. Extremely high water, and you just you can't believe it. I still feel like, is that real? It come and gone, everything floating on first floor wipe out. In short 3 hours, next day, sunny day, nothing happened. Nature's beautiful. And that's what the kind of event that I can think about, you know, something you don't expect, and it will happen. It tells me it's going to happen. And I think, you know, Biden went to multiple locations, and, you know, from Florida, New Jersey, and East Coast, and recently there's announcement for California. I think those kind of weather events also pushed, you know, U.S. investors, just the people in general, knowing that the risk is present and the urgency of making this transition. I think that's probably changed people's mind a lot. If you see the U.S., now you have 22 clean energy states, represent more than 50% of population. They have signed their target. Like in my home state, New Jersey, because we had 2 big hurricanes in past, you know, 10 years. And Sandy was devastating as well. So that was about on the beach. Princeton is inland. So it's plain inland. The water just can dump down certain air, concentrated water, certain area causing flood. So New Jersey has moved their target of clean electricity by 2035, 100% clean electricity, 10 years advance. So now you have 22 states have made their commitment to do the transition. And I think the Inflation Reduction Act really provides certainty for the companies to make move. And I think the certainty is very important. If you have public support, I think private company can do tremendous things. So not 100% rely on public. Right. So that's why I believe this is most critical and biggest transition in our lifetime.
So yeah, we also heard it from Joschka Fischer, right? That for him, the climate challenge is the #1 challenge, right? And what we're talking about here, energy transition, is just one way to help alleviate the effects of climate change. And energy transition, again, from the investor's point of view, right, obviously leads to structural changes in economies and financial markets, right? Which is what we want to talk about. It creates risks and it creates opportunities for investment portfolios. So let's zoom in a bit on those two buckets, right? Risk and opportunities, right? From an investment point of view, right? So from your perspective, what are these type of risk and opportunities that energy transitions opens up for investors? Matt, yeah.
Well, I mean, from our point of view, I think the biggest risk at the moment revolves around critical raw materials. There is obviously a huge opportunity from the energy transition, but it's being potentially impacted by our ability to actually deliver those changes. And one of the factors that is holding us back is the delivery of new critical raw materials projects. A lot of people, I think, lump the mining industry together alongside oil and gas as a negative industry. And you know, I think it's fair to say that coal does sit alongside hydrocarbons as a negative industry and obviously a highly carbon-intensive industry. But certainly other raw materials are absolutely critical to the energy transition. So for instance, copper is used extensively in infrastructure, in high voltage wiring that connects your offshore wind plants and even your onshore wind plants, your solar plants, etc., with the rest of the grid. Battery raw materials like lithium, cobalt, nickel, graphite are absolutely vital to delivering the electric vehicle revolution. So, you know, these critical raw materials are really very much in short supply at the moment, and demand for a number of these materials will have to go up by 5 or 10 times over the next 10 to 15 years to deliver the energy transition. And we are really struggling to source new investment in these projects. We calculate that over the last 4 years, something like $350 billion has been raised or allocated to go into electric vehicles, probably about $100 billion to go into the battery area, cell manufacturing in the Western world, but less than $50 billion has been raised for critical raw material projects. And generally it takes between 7 to 10 years to build a new critical raw material project, and it takes probably 1 to 3 years to build a new EV manufacturing facility or a cell plant. So we really are sitting on a very significant structural shortage and also a shortage in terms of timing. And that's contributing to high and extremely volatile raw material prices, which are pushing up, even as we speak, on a year-on-year basis. And that therefore impacts the entire economics of the energy transition. If copper prices go up, then the prices of copper wiring go up. If lithium prices go up, then the price of batteries goes up and the price of electric vehicles goes up. And the energy transition succeeds or fails according to electric vehicles being ranking similarly with combustion engine vehicles in terms of replacement, because if they cost too much, nobody's going to buy them. So we really are at a very crucial point where it's very, very important that we start to see funding coming into the critical raw material area, because if we don't, there's a risk to the entire energy transition.
Yeah, I mean, there's certainly some super interesting dynamics going on, right, regarding materials, raw materials, and thank you for helping us understand that. So also, from your perspective, risk opportunities in this sector, what would you like to add?
I think in addition to that, it would also be important to diversify the supply chain and then as well to strengthen local supply chain for critical components, and as well to implement circular economy, reusing existing materials, or maybe even inventing new technologies that would limit necessary production of new raw materials and minimize waste. And as a risk, I clearly see some sort of an asset-stranded picture. Missing out on energy transition would mean as well that the company keeping engaging in production, infrastructure, and implementation of, let's say, fossil fuels will have lower valuation in the future and in the long run, and will as well see decreased demand of their own products. It all goes hand in hand, and every risk can be at the same time an opportunity. The sector is growing, economic growth is important, so the sector would also create new jobs, and it's a long-term growth to participate on going forward.
Yeah, so I will talk about how we, from research perspective, how we started. We're looking at, about 100, according to, I think, Finance Alliance for Net Zero, $100 trillion, and McKinsey's estimate is $250 trillion by 2050 are needed to solve climate and environment issues. So this huge number. So it's really, in the research, they break down the different segments and different industries. That's a starting point to see what the future look like, right? Then we starting narrow down to see, what stage we are on at investment stage. And I think a recent Inflation Reduction Acts, coupled with other two legislations passed in US, really provide acceleration booster, acceleration to this transition. $500 trillion, people think it's not a big deal, but just to consider each year, in the next 10 years, each year will be 60 billion, right? So in last 10 years, the total US contribution dedicated fund to clean energy transition is about 20 billion, 10 years period. So now 1 year is 3 times bigger. So I think talking with the industry, I think a lot of time is they feel like this legislation really give the certainty to the company. See, we can plan for the future. I think that's very critical. And in US, there's the capitalism kind of spirit. Always, people see opportunity, they will move forward much faster. And I think those are the things that in near term, you probably will see a lot of spin-offs, merger acquisition, divestments, and corporations will do strategic review, particularly in energy sectors and supply chain related, industrial, and also transportation. Talking about the breakdowns of opportunities, you will see that one of the item is called carbon capture, utilization, and storage. This is one of the things not in European Green Deal, right? It's like very unique in the US, and they really changed the code and to include So direct qualified carbon capture credit increased from $50 to $85. And so those are the kind of opportunity, very interesting to see that in US. Then suddenly you have, in short period of time, you have 20 applications like in the process of approval to get permit, to get storage. Basically, they inject the CO2 down to the reservoir to store the CO2 there. And also new technology in direct air capture of CO2. A lot of firms starting to focus on that area. Another area will be storage it will be storage, which is battery storage. Coming back to Matt's concern of supply chain. But I think if demand's there, capital and demands there will be, move faster, hopefully.
So, Chi, let me come back to the funding question, right? That basically you addressed and also Matt addressed. So this is probably, one of the core issues, right? So there's just one number that I read. By 2015, it's going to be $125 trillion that's required to ensure energy security, to ensure energy access, and decarbonization, right? They call it the triple dilemma in energy: security, access, decarbonization. At the same time, just really going back to Joschka Fischer, who said that he sees a super cycle of military spending, right? It's basically happening globally because of the recent events, right? So you see, which is money that is not going obviously into energy transition. So you see there is a fight for funds, and there is this funding gap. And what I'd like to know from you now, Matt, is this funding gap. Maybe describe us a little bit more how that looks like, but also from an investment point of view, does this magnify actually the investment opportunities?
For certain. I think that particularly in the critical raw materials area, there are some great opportunities to invest in new resources. When you're in a long-short fund, you can also benefit from the fact that this area is underinvested and that a lot of businesses are going to be under pressure because this area has been underinvested. So, from our point of view, whatever happens in the energy transition, as an investor, we can benefit from it depending on which way it goes. But I think, on the long side and from the point of view of investment, as a fund, we look at pinch points. We look to try and identify what the pinch points are in the energy transition. And critical raw materials, as I've outlined, is one. And I think infrastructure is another key pinch point here.
That's a good point, because also you mentioned, he's been doing this for 10 years, right? And we know that energy transition has been discussed in various forms, right, for 10 years plus. And the question is, are we already at some sort of tipping point, right, where industries and investment communities really benefit or accelerate, or are we still hopelessly struggling uphill?
I think we are at a point of inflection after 10 tough years. Certainly when we talk to our investors around the world now, 4 or 5 years ago, I'm sure she has feedback on this, but when you spoke about ESG and you talked about the energy transition in the US, people were like, whatever. Now that there is more interest in it globally, I think that one of the big issues up till now has been governments, and we get a lot of, how would we say this in a nice way? Well, forget that. We get a lot of hot air from governments, and we don't necessarily get actual carry-through. Now, with the Inflation Reduction Act in the US, we've seen actual carry-through from the US government. I know you're going to want me to comment about the European equivalent of the IRA. I haven't been so impressed with what Europe has produced. It's
this
more
coming from a Brit, eh?
Yeah. I was wondering when that was going to come up. I think from a point of view of the EU, I'd like to see more in terms of incentives I'd like to see more incentives and less regulation. And I think that while there are some positives from the European Act, which was announced over the last couple of weeks, one of the things that worries me is the regulatory necessity for all of these companies. So if you want to be a strategic project and get on the accelerated approvals list, you've got to tick lots of boxes, which means that the box ticking departments of these companies have got to be built out significantly. And that adds a lot of regulatory burden to what are quite small companies at this stage of development. So I think, from the European point of view, I'd like to see a little bit more in the way of incentives. And I don't know if that's possible under the European structure. To make it more similar to the US environment. So that's
It's difficult. Europe is fragmented politically and regulatory, and US is one market under one law regulation. Maybe we need to have both sides to go forward. Europe is much more prescriptive. We think more in terms of targets and timeline, like net zero by 2050. US is more capitalistic and is providing a market-based approach, giving you incentives to do business, successfully. It can be tax credits, it can be subsidies for projects. But it's great that there is some development in the US. The combination is always the best.
But it's a problem for Europe. I mean, just in the EV space and in the cell manufacturing space, we're seeing businesses now reciting to the US because they can access tax credits there and they can access government support there. And I think, if we, and that includes the UK and Europe, if we are to take this forward as a bloc, we've got to come up with a better solution, a better offering to keep focus in Europe.
To keep the pace as well. The US is actually much more focusing on supporting the local production and manufacturing, while European does not exclude foreign importers. And with that, US will be able to give Europe this push and shift into the next step.
Yeah. So I just wanted to remind you, right, that if you have any questions, these people really know their markets, right? Use the opportunity, put it in the app, and I'll get it here. Now, you mentioned ESG. And obviously, we also have, or should maybe look and talk about what is going on in the US on a political level with the backlash against the term ESG. And just as a mild example of that, I was looking at an energy transition fund deck, let's say 6 months ago. And, it was all, we believe in ESG and da-da-da, right? So then they sent me their updated deck and said, "Oh, Matthias, let's have a look at our updated deck, right? I'm curious to get your feedback." So the first thing that I did was I hit Control F, right, for search, and I was looking for. I was wondering where this, if this ESG term is still showing up in this investment manager's fund deck who is out there in the US trying to raise money to invest in energy transition, right? And as you may think, there was, it was gone. It was flown out of the deck, right? So what is your view, right? Where does this take us, this political debate in the US? Or do you think from a purely investment point of view, from a rational point of view, this is actually a non-event because energy transition is happening anyway, no matter if you call it ESG or not?
I think that the debate is not productive. It's not a good thing. Having said that, there are many ways of being ESG compliant without necessarily calling it ESG. We used to call it corporate responsibility. Call it corporate responsibility if you want. I think people who run energy transition funds, who run clean funds, etc., they're doing it for the right reasons. They're doing it because they believe in the energy transition and they believe in ESG. So I think that you can still run a responsibly run fund, invest in responsibly led companies without giving it the ticker ESG if you want to. I mean, for us, we kind of see ESG as a vital risk management approach for our fund. We have our own ESG screening approach for the companies that we look at. And, you know, we screen on different elements. And the number of times that, you know, we've had a negative on our ESG screen, haven't invested in a company, and that company's got into trouble down the road, is quite substantial. So, you know, for me, ESG is a core component of risk management for an investment fund. And, you know, whether it's politically incorrect or too politically correct, it's still a key component of the energy transition. And, you know, we wouldn't be in this space if we didn't want to invest responsibly. So I think, you know, the politicians can do their thing, and, you know, we as investors can get on with doing our thing. And, you know, we don't necessarily have to hang a moniker on it.
Right. Any other comments?
Sure.
Yes, you?
So sustainability has been a key focus, actually, consideration in the investment selection, because our investment tend to be long-term in nature. So, and even without ESG is very good framework, because, you know, a company who has, you know, we look at the company's, you know, presentation, information disclosure, it gives you a insight into company, how they manage, how they think of different issues and risks. I think it's very helpful. The more data disclosed, the better. In terms how to use that data, I think people have a different way. I think the issue about rating agencies, their methodology are so different, and the conclusion is, you know, they're not correlated to performance. So that could be an issue. But I think the data itself there is very, very important. Like, people can use it. You know, just any investment you want to do, this additional information give you insight how company will deal with their environmental issues, potential risks. And I think in terms of energy transition, you know, going back to the big map again, we're looking at in next 10 years could be battery electrification aspect, but in the future could be hydrogen, right? So in the hydrogen, it's much powerful to decarbonize industry, a lot of transportation, heavy industry and transportation, shipping. So I think in that transition, the oil company will be involved, because they could be a, you know, stepping stone, because the existing infrastructure can be used. So the debate of inclusion, exclusion, or engagement, I think you need all of them, all the two available. I don't want to say this, you know, our company is absolutely bad, or, you know, this company, see this ESG is absolutely good, because you have to look at specific company, what they do, what their plan, because we are investing the future. Right? The past is the past. We have to think about future. What's their plan? And given the windfall from last year from oil company, it might be wise for them to, you know, accelerate the research to renewable. So, so I don't want to. I'm focused on solution. I'm not focused on label, right? It's really, people call things differently, name things different. But coming down to solution, what are the solutions? I think renewable energy like wind and solar are essential to power green hydrogen in the future. So the step, we have step next 17 years and the future. So in that roadmap, we have to think about who's going to be included in that roadmap.
Right, so it's not only listed markets, right, where you can play energy transition, is also venture capital. I've just pulled up an article here, right? We see big names like Temasek and BlackRock. They have a 600 million decarbonization partners venture. Bill Gates has a 2 billion breakthrough energy venture fund. And these are all part of this wider ecosystem of private capital owners that do their investments to basically find solutions, right, as G said. So my question to you is, how do you see this rate of adoption of these new technologies? And also, to continue, and also maybe what you already started to explain is, are there some game-changing technologies on the horizon that really help us, turn that ship around? So a big question, right? Rate of adoption from VC to, general markets, consumer markets, etc., and then any game-changing technology? Yeah, Jean?
I think it's green hydrogen.
Yes, okay, green hydrogen.
Yeah. We look at solar and EV, and as Matt mentioned, the supply chain, the resource is limited, right? If we think of future, the unlimited resource will be water. So if we have ability to create technology, create green hydrogen energy from water, that will be very ideal. But that water has to be powered by renewable, which is wind and solar. And as the mining, cycle starts 7 years investment cycle, it's very long. We really need to move faster. We need to find, really a big solution, adoption. For instance, EV, just talking about EV, right? Personally, I have a Tesla, fortunately get the credit, and also the installation of the charging station. And so in the US, Tesla has done a great job of all the charging stations. I have driven from New Jersey to Florida with Tesla. It's a great experience. I'm a very bad driver, but I enjoy the trip because it mapped all the charging station, 30 minutes charging up. You can watch Netflix while you're out waiting. So it's a very good experience. I do believe EV will replace, but the adoption rate, the speed is just not there fast enough. So you think about how many cars out there, 1.2 billion, and by 2030, even Tesla can produce 20 million. It's 20% of sales, car sales in 2030. So coming back again, scale, solution. We want to see solution faster enough to provide this, make the transition happening. But I think EV will be there and it will be more adoption, but it's take some time. Okay. Yeah.
The EV charging infrastructure is one of the undervalued segments at the moment. So the companies who are actually building and engaging in that infrastructure will benefit enormously from the growing demand of EVs. And then again, it's either a new technology or eventually a new market, like what happened with the carbon markets, that they accelerated the incentive of reducing emissions.
Okay. Matt, from you?
I would say that EV adoption is obviously the poster child of the energy transition. It's coming along quite rapidly. I think global new car electric vehicle sales penetration is up to about 15 to 20% on a monthly basis. So it's coming along, but we obviously need it to go faster. There are a lot of areas around the edges which are very exciting. There's some really interesting new technologies around fast charging. Fast charging is going to be absolutely key for electric vehicles going forward. If you can charge it in 5 to 10 minutes rather than overnight or whatever, then that's a big change in terms of how viable EVs are if you can just charge them up on the side of the road rather than having to leave them overnight. So there's some interesting new technologies. Stationary storage is a really exciting, fast-growing market for cells, for batteries. It sits alongside renewables, the renewables area, and it basically allows you to store up the energy that you produce from renewables and let it go overnight, or let it go in periods when there may not be renewables available on the grid, and that's a huge game changer for renewables. So there's lots of things coming along in the energy transition. different cell chemistries at the edges that which potentially would lower the cost of cells, fast charging technology, and stationary storage, which I think are going to have huge impacts. Rooftop solar, which we've been talking about for years, but is finally starting to come through now. Residential solar and making virtual power plants from solar panels in people's homes. So there's lots of really exciting new technologies which will be key enablers for the energy transition going forward. And they are coming through at the moment, yeah.
And them also being cost efficient, since now solar and wind are competitive in the cost aspect with the fossil fuels.
Right.
Yeah. In the U.S., actually, there are a lot of onshore wind installation, and solar now is actually cost less than other source of energy, fossil fuel. And talking about charging, that's definitely critical. As I travel, I always going any place I will check out. And actually tomorrow I'm going to drive a Tesla from here to Munich to check out the charging station in Germany, just get a sense of what the state is, because it's very important. Consumers will switch. If all things equal, it's better and cheaper, they will switch. I think a Tesla price will come down. You will see more adoption there. I can see in New Jersey already, because when you purchase a Tesla, it's a tax, free. You don't have to pay tax. And this year there's a credit. And installation of a level 2 charging is, it's overnight charging, but it's you get a refund. It's about $800 with installation and equipment, but the utility company will give you a refund.
Right. So ladies and gentlemen, got 3 minutes left. I have to make a confession. I said twice I will answer your questions that come in through this iPad, but I kind of messed up the iPad and I don't find the page. If there were any questions, did somebody ask any questions? Yes, please, just loud. For G, about the reactors in the US, do you see an investment opportunity there? Is that correct?
Yes. So I think so. Yeah, definitely. Last year and a half, really, I've spent a lot of time in this focus of more like solution-based. I think, interesting enough, I'll just give you some examples. Last year, we started with Europe. The reason is Europe is more advanced in this issue and solution. And also European market valuation is very attractive. That's a two combination of, so we came in looking at EV markets as well, because I think that's why EV market as well industrial, because German company, a lot of the European companies, they provide equipment to all this, energy efficiency or wind turbine, renewable. So we invest one of the companies, largest companies, Germany. It's up 50% so far. It's really proof of a thesis, the timing and also probably the thesis there. And EV in Europe, I think it will pick up in the future, but valuation also attractive. In the US, we see a lot, some opportunities. If you look at under breakdowns of IRA, the incentive goes to, and green hydrogen is brand new. However, called carbon capture and utilization and storage, that's also a very interesting area. You will see some technology coming out there. Basically, direct air capture of CO2 to put into the pipe. Right. So those are the areas we are looking at. And I believe there are new things emerging. The existing company, utility company have new investment, they invest different technology. We're also looking into those technology to get inside what's going on in the market.
Okay. So we're out of time. If you have any more questions, right, please don't hesitate. Come up, speak to these people. Just one quick question to finish up. Regarding this energy transition, are you a pessimist or are you an optimist? Will we succeed or we won't make it? What's your view? Matt?
I want to be an optimist, but I'm a little bit worried about the areas I talked about with regards to critical raw materials, but I want to be an optimist.
Okay, thank you. Natalia?
I'm a realist. I'm seeing the development being accelerated. Last year, we had investments coming in of $1.1 trillion US. And since the very beginning, in 2004, the investments in total up to now are $6.7 trillion. And to connect the very first trillion, it took 6 years' time. So now we are definitely seeing the topic growing and the trend growing tremendously. So it's the biggest trend for the next couple of decades. I do see a lot of potential there.
So, and Chi?
Obvious, I'm an optimist.
Optimist. All right.
Yeah,
great.
I think it's the solution. We really have the tool now. Like even in China, if you read a recent article, but Goldman came out that China has moved up its targets. It will triple its wind and solar installation by triple 2030, triple their target, and their net zero move to 2050. So I think another area for China is important is hydrogen. I think you need to resource it's big bottleneck. So
we obviously need India to follow, right? But
Yeah.
that's another geopolitical discussion. I want to thank you for staying. Thank you very much. Help me thank our panelists. Thank you. Thank you.